I'm not used to following the script. We usually hand out a deck and I wing it. But the PR guys and the lawyers have told me I have to quit trying to be Donald Trump and go off script all the time. So I'm going to try and follow a script. My name is Scott Boys. My background, believe it or not, is banking, commercial banking, investment banking. A few years ago, we did a roll-up of transportation companies and then drifted through a consulting arrangement into the cannabis space. And that was about 3.5 years ago. Got so fascinated by the space that we raised a little bit of money, went public on one of the exchanges in Canada, made a Canadian license application, spent several $100,000 on the application, and then sat back and waited for Health Canada to do their thing. I'm not a particularly patient guy, so I started exploring the industry in the US, realized that while a Canadian license would be valuable, the real opportunities, of course, exist stateside. Now, I'm Canadian by birth and by residency, but I spent a big chunk of my career in the United States, so doing business here was pretty natural for me. So the company is traded on the Canadian Securities Exchange. We were with the TMX group, but the exchange has a policy that if you do business with a company in the United States, you can't trade on their exchange. So we delisted and relisted on the CSE, and we're also trading on OTC as a QB level. Actually, many days we're trading more shares now on OTC than we're actually trading in Canada. Okay, I got to do this legal stuff just to keep the lawyer happy. Okay. So we did our first transaction in January of this year. So we haven't actually been in the market that long. We went over to the UK, raised $27 million US in about 10 days. It was one of the most remarkable 10 days I've ever had. And as Al referred to, one of our largest investors actually comes out of Abu Dhabi. So, and we have quite a few investors from Europe, as well as from the United Kingdom. About 150 of our shareholders now are outside the United States or Canada. We have a strong balance sheet. The strategy is roll up. So go out, acquire companies, or acquire licenses and greenfield companies. You've heard this story before a few times. Once our business plan is fully implemented, or our current business plan, we'll be running in 4 US states, 10 dispensaries, producing 9 million grams of flower under cultivation and 1.2 million grams of concentrate. And our Canadian license is pending, and actually we've had a lot of activity on it the last little while, so that's progressing as well. We're focusing on innovation, both in cultivation and in the production of concentrates and so forth, trying to come in with a low-cost strategy, but still producing a high yield and high-quality flower, and a real focus on concentrate, on oils, shatter, wax, live resin, all the various products now that are making up so much of the SKU levels that we're seeing in the dispensaries. We're well capitalized. We have enough funding available to execute the strategy that you're going to see today, and we have access to the public markets to fuel future growth. I don't have to get in and talk to you fellas about you people about the U.S. market. You know how fragmented it is. I mean, my background is business, and one of the strategies is to say, if you look at the multiples that the companies in Canada trade at, based on multiples of revenue or multiples of cash flow, we can buy businesses here at a much lower multiple and arbitrage them into the public markets, as well as having access for capital. So what do we have? We have some pretty well-established brands. We've got fixed assets and operating assets, both cultivation and production. And so far we have 3 operating dispensaries, and we'll be adding more over the next little while. Health for Life in the Arizona market is a very well-established brand. It's also, I'll get into it a little bit later, but we're expanding the same brand into the other states. The MPX brand is a brand of concentrates. We won the Herrera Cup at the Marijuana Business Conference in Las Vegas last fall. It's won awards in Arizona as the best concentrate. And it's been pretty successful. In fact, the MPX brand now represents about 47% of our revenue. So almost equal now with flower production and accessories production. So this is where I start to drift off because I don't like following a text. But we've got a wide variety of products. You'll see some of the pictures of our dispensary. We've got great seed bank. We're focusing, as I said, on high margin concentrates. And we have a couple JVs that we've announced that are going to, and I'll get into those a little bit later, that give us even more diversity of product and market availability. So here's, just based on current acquisitions and current, not planning, because we're pretty well advanced in most of this, this is all fully funded. This is how our concentrate and flower production will mature. We'll probably have this full capability by the end of Q1 of next year. So it's well in the process of being built out as we speak. Current operations are based primarily now in Arizona. We love the state of Arizona, sufficiently well regulated to be to meet standards of quality and distribution. The number of licensees is limited by statute, so the competitive environment is relatively flat, and we've been able to maintain a pretty good pricing in the state. And when you get a license in Arizona, you have a license to operate a dispensary, to operate a production facility, to operate an on-site cultivation and an off-site cultivation. So you're vertically integrated the day you get your license. We currently own 3 licenses in the state. We've got 2 operating dispensaries. We're opening a 3rd one next month. And we're looking to acquire another one later this year. Arizona is a pretty attractive market. It has, I mean, I'm Canadian, so we always compare it to the Canadian market. We have about 150,000 medical cards in Canada, and there are now about 135,000 just within the state of Arizona. So, and it's served by less than 90 dispensaries. So it's been pretty attractive. Our sales have been growing at 12 to 15% quarter over quarter, and it's a relatively mature market. So. Earlier this year, we acquired 51% of an operation in Massachusetts. I was there earlier this week. That market really excites me. We're building out a 40,000 square foot cultivation and production facility just outside of Fall River, which is down in the southwest corner of the state, right across from Providence, Rhode Island. We've acquired properties for 2 dispensaries, one in Fall River and one in a town halfway back to Boston, and we're looking for a property for a 3rd one. We expect the dispensaries to be built out fully by the Q1 of next year, and we hope to have the production and cultivation facility operating as well in Q1. So it'll produce up to 2.25 million grams of flower and up to 500,000 grams of high-end concentrate. We announced on Friday that we've finally been able to close an acquisition in the state of Nevada. We acquired a 25,000 square foot cultivation and production facility in the state. It's been actually been operating for 3 or 4 months. It's a state-of-the-art production facility and a high-end quality cultivation facility. It's all indoor. We have no outdoor or no greenhouse grow. We're focusing totally on indoor and getting high quality flower so that we can hold our pricing up and supplying ourselves with trim and so forth for concentrate production. Obviously Nevada is going to be a great state with 45 million people jumping into Las Vegas. We've also acquired, we've now leased a property to acquire a dispensary. The dispensary licenses are being issued in December, and we think we're in pretty good position to operate a dispensary. It's halfway between the Strip and Fremont Street, so it'll get a fair amount of traffic. It's about a 5-minute drive from the Strip and a 3 or 4 minute walk from the Fremont Street experience. We've also acquired a property across the street that, if the state legislation progresses as we think it will, we'll have the ability to open a lounge, a cannabis lounge, right across the street. So, most of our acquisitions, we have two models to grow. One is greenfield, like we've done in Massachusetts, where we acquired a license and we've actually built out the facility ourselves. And the other is to acquire an existing business. And we're always looking for something we acquire at 3 to 4 times projected EBITDA over the next 12 years. We look for gross margins of 50 to 55% and EBITDA margins of 35%. And so far, we've been able to stay within those metrics. So if you look at the Canadian markets, they're trading at 15 and 17 times revenue. That's a pretty good value proposition for us. So we've only produced 2 quarters of results. The first quarter was a little bit skewed. We report under IFRS rules, and unless you want to get into the deep accounting, it's a pretty screwed up way of reporting for those of us who are used to US GAAP. But we actually were EBITDA positive last quarter. And if you look at the number of companies, public companies in the sector that are actually generating real earnings, we're amongst a select few. And if you look at it in terms of revenue by quarter, we're actually, of all the Canadian publicly reporting companies, we're now the 5th largest in quarter-over-quarter revenue. So we're producing almost as much revenue as Afria and slightly more than Canamed. And when you look at our stock price compared to theirs, we got a pretty low valuation. So what are we doing going forward? Organically, we're expanding our cultivation and production facilities in Phoenix. We're going to double the size of production facilities. We'll have up to about 3.2 million grams of cultivation and about 500,000 grams of concentrate production in the state by the end of this year. That facility will be open in December. We've also introduced a very high-yielding, low-cost technology for cultivation. It's a rotary garden system we've been experimenting with for several months in Arizona, and we're going to introduce it on a broader scale in Arizona later next year in the new facility. And finally, I'm going to talk a little bit about our joint venture with Panexia. Panexia is a 50-year-old, part of a 50-year-old group of pharmaceutical companies based in Israel. And they've been doing a lot of research into developing medical grade, GMP grade pharmaceutical products that they can sell to the medical or convince the medical community. They're scalable, they're repeatable, they're measurable doses, and they've actually developed 32 SKUs of products geared specifically towards the medical market. They use up to 7 of the cannabinoids out of cannabis. They've identified them. They create ratios, have developed medicines to treat specific conditions. We're working with them. They actually build a GMP grade facility within our existing structures. We deliver them the trim. They produce the package and deliverable goods out the other end of the door. And then we sell them through our dispensaries and to the 40 other dispensaries within the state that we sell. We're launching the first production unit in Arizona, probably in Q1 of next year, expanding it into Nevada and into Massachusetts later in the year. The product is already available in New Mexico. They did a joint venture with a company in New Mexico, and we went down and examined it. In the first 6 months, they're at a $2 million run rate on sales of these products. So if they can do that in New Mexico with 2 million people, what we can do with 6 million people in Arizona and the whole population of the Northeast that can be fed through Massachusetts, we think this is going to be a big winner for us. So I talked a little bit about the Rhoda technology, and Rhoda is the actual name of the company that supplied the initial technology. We're working on improving that even more. But we can actually produce 8 to 10 pounds of flower on a 60 square foot footprint. They can produce 8 to 10 pounds every 8 to 10 weeks out of one of these units, and you can stack them 3 high. So literally we could get 3 times that kind of production on a footprint the size of a normal table. It's high quality flower. It's produced with a lower cost. Labor costs are about 1/3 of normal cultivation. Power costs are reduced by about 1/2. And because the units are so concentrated, we get higher yield per square foot than any other type of cultivation we've ever seen. We think we can bring our cultivation cost well down below $1 a gram. Oops. So the acquisition strategy, of course, we talked about all the valuations we want to either be immediately accretive or within the 12 months. We've tried to acquire licensed operators with a track record. We don't do anything that close to a turnaround. We only buy businesses that we think will be generating cash flow positive early on. Or we greenfield in those areas where we can be vertically integrated, where we've got a strong market capability, and where the regulatory environment is somewhat restrictive to the point that we don't have to compete with the numbers that you see in Colorado and California and some of the other states. So where are we? Well, we've got our existing facilities in Arizona. And once again, 2 cultivations, full production center, 3 dispensaries. We've got our operations in just outside of Boston, cultivation, 40,000 square foot production and cultivation facility currently under construction, 2 dispensaries under development. We just acquired the facility in North Las Vegas. It gives us 25,000 square feet of of cultivation, and a very advanced production site. We're selling to about 40 dispensaries in the state of Arizona, and we're selling up to about 15 dispensaries so far in the state of Nevada. In both states, our biggest challenge is availability of supply. We just don't have enough flower and enough trim to be able to meet the market demand. Our next target is another company in Arizona. It's producing about 8 to 10 million a year in revenue and about 3.5 million in cash flow. We hope to close that acquisition before the end of the year. And we're very advanced in Maryland. We're establishing management companies for 3 licensed dispensaries and 1 production site in the state. The production site was actually licensed last week. And the 2 of the 3 dispensaries are pretty well advanced in terms of build out. The dispensaries will all be fully built out by the end of the year, and of course the production site is licensed already. So in terms of financing, we raised $27 million, as I said, in London in January of this year. We raised another $12 million US, primarily with 1 large US investor in May of this year. And we've also arranged for a $25 million credit facility at 7% financing to be used towards capacity expansion and acquisition. So we're very well funded. We've got lots of plans to grow more, so we'll be back to the markets in a little while, but for the current time, we're pretty well funded. So far, we've acquired businesses with an acquisition value of $58 million. We've spent $29 million in cash, and the balance we've used our stock as currency or debt to finance them. I talked briefly about the target in Arizona. 3 times cash flow is our purchase price. It's growing very strong, very quickly. It's got a well-developed concentrate and extraction facility, and they're selling a large amount of concentrate into the state that we'll be able to use to complement with their MPX product. The acquisitions in Maryland, their greenfield operations, our total investment will be about 1 time projected revenue or EBITDA for next year. And the state is going to be an exciting medical state. 172 doctors have already been assigned rights to prescribe cards for the state, and there's about 13,000 cards that have already been issued, and the program hasn't really officially launched yet. So what are we doing in the near future? Well, we announced on Friday we're changing our name from Canadian Bioceutical, which is a bit of a misnomer when we have no assets in Canada whatsoever. We're changing it to MPX Bioceutical Corporation and changing the symbol to MPX. So MPX is the concentrate brand that we're selling. It's an identifiable name throughout Arizona and Nevada, soon to be identified in Boston, in Massachusetts and Maryland as well, and in other states as we expand. We're refreshing our board of directors. We've got new directors. We've got a doctor joining us, a PhD in pharmacology, who's worked on projects in Canada on nervous disorders and the use of cannabis to treat various nervous disorders. And he's currently working at UC San Diego on 2 cannabis-based projects there, one on a seizure disorder, on the other in developing a methodology for testing cannabis impairment. And they're pretty advanced in that. He's a pretty interesting guy to talk to. He's a real believer in this as medicine, and he's going to be there on our board and as our medical advisor. The other new board member, we have 2 board members joining us from one of the largest technology companies in the United States, believe it or not, in developing nuclear technology and nuclear reactor technology. Their shareholder is one of our largest shareholders, and both their CFO and their general counsel are joining their board. And the other new board member is one of the most famous developers of the program in Nevada. Senator Tick Seegerblum is joining our board as well. So he's a pretty colorful character, well-versed in the industry, well-known in the industry. He's a lawyer by trade. He was a state senator. and he's going to be a very valuable addition to our board of directors. We're also upgrading our listing on OTC to OTCQX. As I said, we're opening dispensaries and expanding of our cultivation capacity in Nevada. We're going to try and double our cultivation size in Nevada. And we're targeting new licenses like others. We've applied for a license in Ohio. We're pretty confident we'll get a license in New Jersey next year when the legislation comes out there. And we're talking with some people about potential acquisition in Michigan. None of these, of course, are final yet. They're all just targets, but we think next year will be as exciting as this year. So. And finally, we've had recent developments on our Canadian license. We're building out a 60,000 square foot facility just north of Toronto that will be, and once again, we're hoping on using the development experience we've had with concentrates and production and branding and so forth in the United States and exporting that to Canada. The Canadian market is way behind the US market in terms of how it's, of the product availability, product diversity, and believe it or not, product quality. So they've got a lot to learn up there, and we hope that the people we've developed and the technologies we've developed down here, we can import back to Canada as well. Well, this is pretty well just a summary slide. One of the things I think I talk about when you're talking to investors is we've got to represent the best value proposition of any publicly listed company in this space. I mean, our shares are trading for 37, 38 cents Canadian. Companies that are in the same space, less developed with no revenues and just a business plan are trading at 3 and 4 times that. And I think a lot of it is just public knowledge, getting the message out, a little more exposure. We've really only been around since January. So we've done a lot in the last 8 or 9 months, and we're going to do a lot more in the next year. We're not supposed to throw out numbers, but there's no reason we couldn't be at $100 million in revenue within 18 months or so, just with the current business plan. So where are we today? We're listed, I said, as on the CSE. The symbol is BCC, but it's changing to MPX. We haven't got the new symbol for OTC yet, but that's coming. Shares outstanding, 257 million, fully diluted 311 million. So it gives us a market cap of about $100 million. Canadian, yeah. And that's it.
Excellent.
And in time.
I had a couple questions before we turn it over. First of all, you mentioned a few states that you're interested in. Ohio, where you have a pending application. New Jersey, you mentioned, and maybe Michigan. Why aren't you in New York or Florida? What makes a market attractive to you versus not attractive?
Well, number one, the availability in Florida was pretty limited. I mean, even with the 5 new licenses, I think they were pretty well all picked before they even announced them. So, you know, it really boils down to how much can you do at once. We're well capitalized and we think we have access to capital, but we don't want to bite off more than we can chew. I mean, we even announced we've engaged Desjardins to manage some of our grow facilities for us. I mean, execution is just as important as funding and planning, and you just don't want to do too much. So to jump into 4 states in 10 months was pretty aggressive. To hit 3 or 4 more next year would be just as aggressive, I think. Florida, New York is limited in terms of what's available. We're in Massachusetts. I think we'll get a fair amount of cross-state traffic from southern New York. If we can get into New Jersey, and we think we will, we've got some pretty good connections there. And I think the application process, actually, Bess Stavola, who's our COO in the U.S., is actually on the commission designing some of the regulations for the state. So she's a resident too. And she's a resident, and the family is resident, and one of our largest investors is an influential resident. And I hope the process isn't political, because we kind of discount the politics and all these things. They shouldn't be there, although they sometimes are. But it'd be just as good to have a dispensary at the end of the Lincoln Tunnel as to have one in Syracuse, New York. So.
And then you talked about Panaxia, and I know they have the New Mexico with Ultra Health.
Yeah.
Thanks for the color on how well that's done. Do you have the exclusive rights for the rest of the country?
We have exclusive rights for the states that we're in now.
I see.
And we have right of first refusal for any states that we expand into as we expand into them. Now, Panaxia has only got so much capacity for expansion at the same time. They actually, they built the facility in China. as components. They bring it in and they set it up within our building. So we hook in HVAC, we hook in power, we hook in water, and it's really just an assembly line what comes out the other end. And it's pretty amazing, their process. And it comes out as packaged goods that we just turn around and sell through our dispensaries and distribute to the
Is that
dispensary.
the business model? You didn't pay them anything, it's just,
The CapEx is totally theirs. We give them the trim. And then we take 50% of the revenue. It's a pretty good deal. It's a pretty good deal for us, yeah.
So Connexia and MPX don't.
No, well, MPX is the consumer line, and it's the medical line. What we wanted to have is something that we could go to the medical community, and something else that Connexia does. They're a pharma company, so they've got the research behind them. There's a fair amount of clinical studies been done with the products in Israel, as you know. I mean, when we were over there, we even met Dr. Meshulam. That's how well they are integrated into the program over there. The medical community looks for dosages that are measurable, repeatable, stable. There's certain guidelines that they have for a GMP pharma production facility and pharma quality. They go to the medical community. They actually host seminars. They bring doctors together and they familiarize them with the products. And we're doing some of that in Canada now, but they bring the doctors together for an evening and talk about the products and how they're produced and try to engender into the doctors a sense of comfort with the quality of the product. So,
Product, are you talking about the technologies that Connexia is using to deliver to you?
no, it's the process that they use. And as I said, they've identified, or they use up to 7 different cannabinoids in different ratios for different products to treat different conditions. And they do everything from sublingual tablets to vaginal suppositories for menstrual cramps. Like, they've just got a whole host of products. And they all come in pre-packaged, pre-labeled, and we can deliver them right to the patient. And it is pharma grade, so.
you seem to have a lot of confidence in this Rhoda Grow, and I've been following it, and it's a publicly traded company, but.
It is now, yeah.
But they don't really have any sales yet. What's taking so long? You figured it out. Why are other people, and I saw they just signed another deal with another company, but why is it so slow to be adopted if it's as good as?
I think it's just awareness. Quite frankly, I think they need a little more aggressive sales organization. They've had some product limitations in terms of supply, getting the components. All these things, the components are all made in China, of course, and they've got to get them over here, they assemble here, and then they ship. I think just a little early stage. And based on what we've learned, they need to make some improvements in the system, some lighting improvements. We've talked about enlarging the size of the rotary system. We've talked about changing the tray design. I mean, we're going to get about, our first couple crops in Arizona, we're getting 6 to 7 pounds of flour per unit, and really good quality flour. So we know the technology works. Can it be made better? Yeah. But I think that a facility with 200 or 300 of those machines will produce a lot of flour on a pretty small footprint.
What are your rights and obligations with respect to that company?
Our only rights are right now are Nevada and Arizona, where we've got existing but we are negotiating other things with them. I'm just not free to talk about them right now.
And what kind of obligations do you have? Because I thought there was like a purchase order.
No.
No purchase orders
No.
yet, okay.
No. Not until we've gone through enough testing on the technology to be convinced that it works. I'm already convinced. But if you know growers in this business, they've all got their own idea
Right.
of what's the best. And so I want them to be convinced. So we've been working with them on it. We're talking in Canada, the facility that we're building out here will be totally Rhoda Grow or a derivation thereof. And we'll probably put some of them in Massachusetts as well, just to get off the ground. Now, it's limited in the number of strains you can use. I mean, you've only got in some cases, up to a 6-foot diameter rotary system. So some strains simply won't work. But so far, we've had some pretty good luck with it.
There's a question in the back on the right.
Sure.
Yeah. As a Canadian company with, as I understand it, taking direct positions in U.S. license holders, how do you think about and mitigate the potential negative impact of 280E?
I asked
No-
that a long time ago.
Nobody can mitigate that impact totally. A lot of it is how you set the structure up in terms of production costs. And we can allocate some costs to the production from management and overhead and so forth, but there's no real way. We've got a tax planner in Philadelphia that's doing as good as he can.
You're recognizing the full revenue, as I understand it, of those license holders?
Under IFRS rules, we have to, yeah. If we have control over the license holder's operations, material control, then we have to consolidate the revenues. It's just a rule. International financial reporting standards are significantly different than US GAAP. Quite frankly, I much prefer it down here. It's complicated, it's expensive, but there are some rules that help us. And even if we only own 51%, if we have decisive control over the decision processes, then it gets consolidated. Yeah.
I was wondering what the barriers of entry are you're waiting for other than California before you enter.
Just to make sure your regulations get settled down and we understand exactly where we're going and what we need to do. I'd love to be in California. We looked at some assets here already, particularly out in the Palm Springs area and a couple other places. It's just, and once again, it's two things. It's we want to make sure the regs are finalized and we know what's going to happen. And number two, as I just said to Alan, you can only do so much at one time. And you'd have to have a large operation, I think, here to be competitive. That requires a pretty significant investment, a lot in time and cash, and you can only do so much at once. Once again, we're in we've been active since January, so this is October, and we're already in 4 states. So.
Question for you, Alan. Are you going to present us with the slides later on, or? Because I know there are like a few presenters throughout the day, yesterday and today.
To the extent we can, we'll publish the slides, yeah. Or I'm sure if you give them your card.
Yeah, I'm happy to email it to you. Sure.
Thank you.
Do you notice now that you're becoming a little bit more visible, that you're getting inbound?
Well, when we first started trading in January, we were trading like 12 and 15,000 shares a day, which was very frustrating. Friday we traded 2.3 million. So the numbers are getting up there, but we have a lot of shares out. I mean, we raised 27 million at 20 cents. So there's 140 million, 150 million shares were out. And some of them, as soon as they hit 40 cents, somebody start taking money off the table. So we got a lot of, fortunately there's been buyers, but it's just held the price down.
No, I'm sorry, I was asking about, since you've gotten a little bit more visibility, are you seeing people reach out to you to try to sell themselves?
Oh.
The deal flow is what I'm asking about.
3 a week.
Yeah.
Yeah.
And who handles that? Is that all you, or is there somebody on your staff?
Well, my CFO's been working some of it, doing some of the due diligence, but most of it we look at first. And quite frankly, most of them don't go past the first or second phone call. So, and once again, we're limiting. We've got to be able to get in at the right price. We've got to get into a state where we're comfortable doing business, and it's got to be meaningful enough to have early impact on our cash flows and our earnings.
And then Massachusetts is obviously a big opportunity. What is your best bet on the timing there? Because we had another speaker say it might be delayed a little bit.
Well, everybody says it could be delayed. One of the reasons it's going to be delayed is because out of all the licenses issued, I just don't think there's that many are going to get up and ramped up in time.
So the state would hold back till there's enough supply?
Well, we'll discourage that because we'll be ready. But that's part of the problem. I mean, every state, even Maryland, has gone through these gyrations. But out of the, 84, 94 licenses issued in Maryland, I'll bet you 25% of them aren't up and running on time. So I hope Massachusetts doesn't get delayed. To me, that's the most exciting market we're in. I mean, Nevada's great and all the tourists, but Massachusetts, I just think has so much potential because it's 26 million people that are around it in terms of state. The state itself's got a large population. It's a pretty liberal population. I suspect there's a large number of recreational users in the state already. And
College kids.
Yeah. One of the locations we're looking at is it's in the same area as Steve Wynn's building a big new casino. I mean, it's just, and even where we are, one of our locations is right across the river from Providence, Rhode Island, and it's about a 20-minute drive into Connecticut. And no place are we more than 150 miles away from 26 million people. So.
Yeah, and my question you're close to Boston. How far is that? How do you?
We're about 45 minutes from the airport. We drove it the other day on 45 minutes. One of the locations is in Attleboro, which is probably 30 minutes from downtown Boston. And Fall River is in the southwest corner, right across from the river from Providence, Rhode Island. Right across.
What's your thinking on the third dispensary?
Well, that's why I said we're looking
Closer in Boston?
near Revere. No, not right in the city
Not
itself.
in the city? Okay.
No.
Because from what I understand, Boston doesn't have enough dispensaries.
Well, we haven't found property. The biggest problem in Massachusetts is getting zoning. Finding a place where the municipality is welcoming and the neighborhood is welcoming. And of course, everybody loves the idea of medical marijuana and recreational marijuana, but nobody wants it in their backyard. So,
NIMBY.
yeah. So,
Any other questions?
okay, thank you.
All right, thank you, Scott.